Hi everyone, it's David and Angie here from FTC. And in today's video, we'll be discussing whether or not we should invest in international markets. Now, this discussion point was sparked from this concept EFT investment report. So I invest in EFTs and I get this report every month. And what was interesting was seeing that the global 100 and tech savvy EFTs, which are international EFTs, significantly outperformed all the other EFTs, which included the Australian EFTs. So these EFTs are basically a portfolio of funds, and these international ones include tech giants like Apple, Amazon, and Microsoft. And so what sparked this strong conversation was that we have a tendency to invest what's close and familiar to us. Of course, we want to support the Aussies and invest in Australia, but Australia is also small in comparison to the rest of the world and other economies like the US. And in this day and age, we do have the ability to access bigger capital markets through trading platforms like ComSec. So why not access it? And I think this can also extend to property as well. You don't have to just invest in your backyard or the state that you live in because you need to be in close proximity to your property. We have the ability to invest interstate, for example, particularly if the numbers make sense to you. And yeah, Angie, what do you think about that?
So the only thing I'd like to add is capital markets, especially international capital markets, like the New York Stock Exchange is one of the places you can trade, the European Stock Exchange, all these different markets, they move very quick. When you buy property, for example, it's a very slow process. By the time you go find the property, inspect it, do the 6 to 8 week settlement process, up until you get the keys, that usually takes 2 or 3 months. With equity markets, capital markets, it's all by the milliseconds. So if you decide to buy something, you have an inkling to buy Apple stock today, you can literally go on and buy that stock like right now and purchase the shares in Apple straight away. So you can get in and out very quick. So the decision-making process is a lot quicker, and it can be sometimes smoother depending on how much you're investing as well. So I think you also need to be very mindful that there are a lot of different players playing in these markets as well. And because you can get in and out of it so quick, the sensitivity to news is there, and you will be able to see when there's some sort of bad news, like there's an attack, there's a war, there's a cyber attack or something. Stock prices, equity prices generally move very quick in reaction to those type of events. So you're just going to be very careful that there's not just set and forget type of strategies with stocks as well. A lot of things like geopolitical risks, risks of the actual company, anything. There are so many different things that can move markets, and this is why it's very sensitive to news. So if you're thinking to invest in these types of products, be very mindful. I think it's going to move very quick, and just because it's happened in the past doesn't mean it's going to happen in the future. So be careful when it comes to working out dividend distributions, reinvestment plans, or if you're going to get out at a certain price, as in an appreciation of the share price. These things don't follow any sort of trends, especially if you're trying to look back and trying to forecast. There are so many different things that impact these types of decisions. So
Yeah, definitely great points. Liquidity, speed of the market, things like that, all very important when making financial decisions. And of course, this is not financial advice, but of course, it's good to understand the performance of your investments. And you may not think you're an investor, but we all have superannuation. So perhaps this is a chance to consider how your super is actually being invested. And finally, I just want to touch on what the tax implications are for investing in ETFs. And just know that it's very similar to domestic shares. Dividends and distributions form part of your assessable income. And then if you sell or dispose of your asset, then that is subject to CGT. But tax concessions like the CGT discount is also available. And just when you're registering on these trading platforms, go to a reputable site, of course, and make sure you register your TFN so that all your information, all your trading information will be sent to the ATO for the inclusion in your tax return, and it will make tax time so much more easier. So that concludes today's discussion. If you have any questions, of course, reach out and have a lovely day. See ya.